Hello and a very warm welcome to HW News with me, Ali Azhar, for the business headlines of the day. Today's show will highlight the 5 important amendments made by the recent interim budget to the Income Tax Act and its implications for me and you. Let's get started. The interim budget announced yesterday by the interim Finance Minister Piyush Goyal was a populist one. There's no denying that. One of the most important aspects, if not the most important one, was the generous doling out of tax SOPs. The dictionary definition of a SOP is something unimportant or of little value that is offered to stop complaints or unhappiness. Perhaps, in a twist of fate, the interim finance minister just happens to be a chartered accountant by profession, and his expertise lies in the field of taxation. Also, while these tax benefits may not hold much value for wealthy individuals, they certainly are worth their weight in gold for the middle class, salaried individuals and pensioners, which, not entirely coincidentally, form a big part of the vote bank. First off, the budget made an amendment to Section 87A, which deals with rebates. A rebate is a refund of the amount of excess tax paid. The budget proposed to increase this amount of rebate up to a total income of 5 lakh rupees from the earlier 3.5 lakh rupees. Contrary to popular belief, the finance minister didn't change the tax slabs or exemptions. Hence, the basic exemption limit of 2,50,000 continues to apply to everyone. Earlier, if your taxable income was up to 3,50,000 rupees, you got a tax rebate or refund of 2,500 rupees. Now, this limit has been increased to 5 lakh rupees and you will receive a rebate of 12,500 at the applicable tax rate of 5%. This announcement is expected to benefit 3 crore small taxpayers, totaling a staggering 18,500 crore rupees. Let's see what the finance minister had to say.
Major tax reforms undertaken by us during the last 4.5 years, both tax collection as well as the tax base have shown significant increase, and we have made progress towards achieving a moderate taxation, high compliance regime. It is therefore just and equitable that some benefits from the tax reforms must also be passed on to the middle class taxpayers. Keeping this in view, I propose to further reduce the tax burden on such taxpayers. Though, Madam Speaker, as per convention, the main tax proposals will be presented in the regular budget, small taxpayers, especially the middle class, salary earners, pensioners and senior citizens need certainty in their minds at the beginning of the year about their taxes. Therefore, proposals particularly relating to such class of persons should not wait. Hence, while for the present, the existing rates of income tax will continue for FY 19-20 also, I propose the following changes. Individual taxpayers having taxable annual income up to rupees 5 lakhs will get full tax rebate.
Next up is the standard deduction, which was raised from 40,000 to 50,000 rupees. Standard deduction was introduced in the 2018 budget, and those who have salaried income are eligible to claim this deduction from their taxable income. The government did away with travel and medical reimbursement and in its place introduced this standard deduction, which was now increased by 10,000 rupees via the budget announcement. The Finance Minister also hiked the TDS limit on interest income under Section 194A. The TDS threshold on interest income from savings bank account, post office savings account, fixed deposits, etc. have been raised fourfold from 10,000 rupees to 40,000 rupees. This will not mean any tax benefit, but will result in greater convenience. Earlier, banks would start deducting TDS if your interest income in a year was greater than 10,000 rupees. Now they will do so only if it exceeds 40,000 rupees. Two property-related taxes have been rationalized by this time's budget, which has come as a big relief to middle class. Currently, if you own more than one property, only one of them will be considered as self-occupied for residential purposes. The other one, even if it is lying vacant, is deemed to be let out, and tax has to be paid on the notional value of rent that it is expected to fetch. This term is technically known as annual value. If it is actually let out, then you would have been taxed on actual rent. But paying tax on notional rent on a house that is not fetching any income would pinch everyone, especially the middle class. Hence, middle class families who had to maintain two houses on account of their job or children's education, or even to house their elderly parents, found themselves unnecessarily taxed. The Finance Minister relaxed this rule and proposed that two properties will be considered as self-occupied and thus will not attract tax. The second property-related tax that has been streamlined is the long-term capital gains tax of the popular Section 54. If you sell a residential property after 2 years of its purchase and make a profit, termed as long-term capital gains, such profit will be taxed at 20.6%, including cess, with the benefit of indexation. Currently, if you want to save this tax, you have an option to invest this profit in one other property within the stipulated time. However, now Piyush Goyal has proposed that you can now invest this profit in two other residential properties instead of just one. But capital gains tax will be capped at 2 crore rupees. The changes in the tax law will benefit families who want to sell one big property and buy two separate houses to settle their children or during partition of family assets. It also benefits individuals who live in metros such as Bombay or Delhi, where property prices are much higher. Other than these amendments, Piyush Goyal has also announced that direct tax collections have risen sharply from 6,38,000 crore rupees in 2013-14 to 12 lakh crore rupees, which was an encouraging sign. It is also noteworthy that these changes will be applicable from the next financial year onwards, that is from financial year 2019-20. Thank you for watching HW News. This is me signing off. Have a great day.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.